Yeah, good day everyone, and once again welcome to Forex Network Group. First, I must apologize for the first video which we released earlier because we noticed the audio stopped working from the fourth to the fifth minutes section. Actually, we tried working on it and resolving the issue, but unfortunately, we were not able to resolve the issue, and that is why we are actually doing this video again. This is just let me see, more like a summary of what happened in the first one. Here you'll be able to hear everything and I'll be able to direct you properly. For the first one, it's still the same thing as I said earlier, the same settings, the same moving average, the same, everything is the same, just the audio that wasn't working in the first one. So I felt a lot of people might not be able maybe to understand it clearly or maybe to know how exactly the strategy was, because it's actually a very powerful strategy which we've been, not just me, I and my colleagues, we've been using it for a very long time. We only say we should share it because we felt not that there's not enough strategy outside, but we realized there is more to just giving strategy. And that's why I felt it's not just about seeing the strategy or seeing how to use it, but it's more of explaining further to give you better information on how you can use the strategy profitably. But still, for those that haven't, maybe you didn't watch the first video, this is actually a video which I titled the best scalping strategy, because for me, I think the best I've seen in 2021. So let's go over the indicators again. So the first indicator we use is the 20 period simple moving average. The period is 20, the shift is 0, the method is simple, we apply it to close, the style is 2 pixels, the color is red. As I said earlier, the color is your choice, but for me, I advise you use same as mine. Then the second one is the 50 period, the shift is 0, the method here is exponential, you still apply it to close, the style is still 2 pixels, and of course the color here is blue. As I said, the color, it can change if you wish to, but I advise you use same as mine so you understand it better. So what we're going to do is just the simple moving average crossover. So what I just want is just for what? For the moving average just crossover, telling us either the buyers or the sellers are in control. And remember, the fast moving average is the one that shows us the direction which we should be trading. What I mean is, if the red moving average is the fast one, that means what that was shows us the direction. So for this now, the red moving average is what? Is the 20 period, which is what the fast one. Remember the second one is the 50, which is a bit slow or lagging. So that means the 20 be a bit faster to reacting to changes in price than the 50. So that's why we are following the red moving average. So if the red moving average is above, we look for buy trade. If it's below, we look for what? Sell trade. What I mean is, if you look at this particular level here, you can see it's below here. So that means at this level, we look for sell trade. And right here is above. So we look for what? For buy trade. Okay, so that's it. But now, will you just look for buy or sell trade? No. That is why I said I want to do this video again, so you can hear every word I said earlier. Okay, so what you look for is, once you've seen the crossover, you wait. Actually, it's time to enter the market, but you can't enter the market without having a place where you know you want to leave the market. As a good trader, even before you enter the market, you know your point of exit is either in profit or in loss. So what you're going to be doing is what we'll be telling you where to set your what? Your stop loss and your take profits. I'm trying to take it a bit slow so you can understand everything I'm saying. Let's say you meet the market somewhere around here, crossover around here. Let me just zoom it a little. Oh, sorry. Okay, let me say somewhere around here. Okay, let's say you meet somewhere around this level. So can I take this market? Yes, you can take this market. Why? Because if you're taking this particular trade, that means your stop loss will be above the previous, let me say, somewhere around here, because it should be above the 2 moving average. Your stop loss should be at least a little above the 2 moving average. Let me say it's somewhere here. Remember, you take the market somewhere around this level. That means what you're risking is from here down to this level. That is what you're risking. So, and now to set to take profit, your take profit should be at least 1 to 2 risk reward ratio. So if this is what you're risking, that means you should at least be targeting something around this level. I'm sure you understand. So that means you're targeting something around this level. That means from this level, which you're risking, down to this level. Remember, you're risking from here to here. So I said it should be at least 1 to 2. So let's say somewhere around from this level then to this level. So now let's see what happens. You can see you ended up eating your take profit right at this particular level right here. Remember we said somewhere, where did you enter? Okay, I think you entered somewhere around here. Your stop loss was here, right? Your stop loss somewhere around there. Then I say you should take your profit from here to here. 1 to 2 should be around, let me see, somewhere around here. So you can see it. I'm very sure if actually you enter the market correctly, this should give you a positive trade. Let's look for that trade. Let's look for that trade. This is still going down. Let's look for that trade. Okay, let's go down here. You can know a lot of people might be like, this is a particular, why did you take this one? Let's say the crossover, you meet the market at this particular crossover. Remember, we're using the red one. The red one goes above. So now, how are you going to enter this particular trade on a buy trade? What to do is what? Remember what I said, you consider your take profit and your stop loss. Mainly your stop loss is the most important. As a trader, you should consider more of your stop loss than your take profit. You should ask yourself, can you take this loss? If you should lose this amount of money from your trading capital, can you be able to feel comfortable and not have maybe emotional distress over the trade? Remember, you should not at least risk more than, if possible, 10% of your trading capital on a single trade. So that's it. So let's say the market is somewhere here. This for me is a good trade for you to enter. Why? Because if you're taking this, that means, let's say you meet the market customer around here, that means this should be a buy trade. Your what's it called? Your stop loss should be around this level. Let me remove this first. That means your stop loss will be around this level. You enter around this level. This is a simple loss. So then that means your take profit should be at least above it, which is 1 to 2. Remember, no strategy is perfect. So you should always use your stop loss just in case the market does otherwise. So let's see. This is a loss for us. But are you going to maybe stop trading in? No. Let's go again into this. You enter the market somewhere around this level. That means your stop loss is somewhere around this level. You're entering the market around this. Let me move this a little bit so you can see clearer. Then, okay, I think I can use it now. You enter the market somewhere around this level, and your stop loss is somewhere around this level. Right? Remember, I said it should be above the 2 moving average. Let me see somewhere around this level. That means you're risking from this level down to this level. For me, this trade is too wide. So I won't suggest you take this trade. So what do you do in trades like this? What you wait for the market to pull back to the moving average, thereby trying to reduce the risk you'll be incurring or you'll be putting up for that particular trade. So let's go. If the market pulls back, good. This is exactly what I was talking about. You can see at this particular level, the market pushes back to this moving average. So that means you cannot comfortably enter this market with your stop loss above the 2 moving average right here. Then that means you're not entering somewhere around there. Remember, this is where the market came back and the sellers start coming back into the market. So that means you're entering from here down to this level. That means this risk is now is now minimizable. So your take profit should not be at least 2 times what you're risking. So let's see. You can see it. This was a profit again. So that means we've taken 3 trades now. We've lost just 1, but still, let's still continue. Remember, this particular strategy can be for both the buying and the selling. What does matter is what you're using. And please, this strategy works perfectly on 5-minute charts. I'm sorry I didn't mention that earlier. It's worked better on 5-minute charts. So please make sure you set your moving average correctly and put your chart to the 5-minute chart. Then you can do just as I am doing currently now. So let's for another trade again. Okay, here's another trade. The red moving average is now is now above. Telling of it's time to buy this particular market. Let's see again. That means if you're entering, let me see somewhere. Where did it cost over? Hold on, I want to I want to make sure I put this correctly. Okay. Where did the customer? I think somewhere around there, right? Okay, good. So let's say we use this particular one, then we are entering somewhere around here. That means our stop loss will be somewhere around, and this is what? This is a buying trade, so that means our stop loss will be at least above, somewhere below this. We enter there, so our stop loss should be at least this level. From here to here, the gap is too wide, so this is not a good trade. That means what? We let this market run, then look for another trade again, or wait for it to pull back just as it did at this level. It came back, it came back right here to what? To retest this particular moving average. So that means what? You cannot enter this market because the buyers are still in control, because what? The red moving average is still above. Remember, once the red moving average is above, you look for buy trades. So since it has pulled back here, thereby reducing our what? Our stop loss. We cannot enter this market at this particular level with our stop loss below here. So that means we are now risking, let's say you enter here, the stop loss is here, so just this. You can see this a bit closer for you to work, for you to risk on a single trade. Remember, this is just the 5-minute chart. That means your take profit should be where at least 2 times that particular trade. So let's see. So this again was a loss trade, right? So that means you're taking what? 4 trades, just 2 losses. And remember, if you're losing, that means what? You're making what? 2 times your profits. So let's still continue. Somewhere around here. I'm going to take this trade. Remember, it's cost over, but what you do, you wait for the moving average for the market to pull back to your moving average. And that's what it did here. But now at this level now, it has gone above the moving average. So this is no more a sell market. So let's still see if it comes back, then we can start looking forward for sell trades. Good. It has become a buy market because the red one crossed over at this level here. So it has become a buy trade. That means I look for buy setup. The same thing. Remember, if it's crossed over here, that means you enter somewhere here, then this is where the market, this is where it's crossed over, right? So that means your stop loss will be somewhere around here. So that means you're risking from here down to this level, which is too wide. So you wait for the market to pull back to the moving average again. Let's see if the buyer didn't come in. Okay, I think the buyers came in somewhere around there again. But as you can see, this is not really a good trade. So let's look for a perfect trade again. Okay, I think there was a crossover here again. That means the red came down here again. So the same thing happens. I'm trying to take time so you can understand it very well. So then you enter the market somewhere around here. Or I think this is where it crossover right here. So you enter the market somewhere around this particular one, then here. So from here down to this level. This is not too wide again, so you can take this trade. Remember, your stop loss will not be here above the moving average. So let's see again what happens here. You see, this was the take profit again. You can see, remember, we entered, let me move this. We entered somewhere around this level. We entered somewhere around this level. Where did it cost over? I think that should be, yeah, somewhere around this particular candle. Then our stop loss is there, so from here down here. So that means we are risking somewhere around here. As you can see, this was a what? This was another profit trade for us at this particular level right here. So that means this is where, okay, good. So that means this is where we'll be taking our profits. This is the candle that it our take profits. So that means we enter what 5 trade and we've made what 3 profits. So I'm sure you can really understand this strategy at this level. Remember, it's for both the boom and the crash. So please do well to watch the video over and over again. And if you haven't subscribed, please hit the subscribe button. Tomorrow is Saturday, so we'll be doing our weekly analysis where we give you prediction of what you're going to be expecting next week. Once again, thank you so much, and don't forget, click on the subscribe button and please put on the notification icon by clicking on the bell so you get notified once we post our next video. So see you tomorrow with the weekly analysis. Bye for now.